All right, so I mean, basic money management strategy consists of um, discipline, consists of stop losses, proper risk to reward ratio, and a plan. All right, now, so we need to get into a plan. This is a plan that I use, what I like. Now, you can adjust this plan however you like. Okay, this is, um, I like to use this plan. I've kind of modified it myself. I've heard, 20 pips. I've heard people talk about, hey, 20 pips is all you need. And sure, I can see it. I mean, 5 pips. If I knew I could get 5 pips every day, 100% of the time, I would do it. But nothing's 100%. Um, so why 20? Well, the problem I've noticed with many traders is, you come into Forex, you think about how many pips you're going to make, and they see people, you know, making 100. You hear George Soros breaking the bank, and totally killing the sterling and single-handedly making billions of dollars. And, people think that and they get involved with that mentality. And it's dangerous because it's not, it's so rare that that kind of stuff happens that to think that that's possible is somewhat naive, you know. Um, so, once a trader wins, he gets a good trade, it feels good. You want to keep going, so you keep trading. In fact, most traders do not stop after a winning trade. In fact, most don't stop after a losing trade. After a losing trade, they want to make back that recent loss. And in that attempt to make it back, sometimes you lose again. And then you want to go again. The motion gets different. Sometimes you only quit when you've reached such a low point that you're basically sick to your stomach. And so secretly they're trying for those 100 pip days, and in doing so, they may have been up 30 or 40, but because they didn't want to stop, they gave it all back. And usually most traders will just trade until they're in the negative so much that they can't take it anymore. It's really hard to get a trader to stop positive. Um, so, you know, just like any successful business, I think it's important to have goals and targets, if you will. Yeah, I'm telling you guys, it's not pleasant. Um, that is not a pleasant feeling in your gut sinking there. But we all go through it. In fact, that's the real way to learn. You got to go through it, and that's why you need to start off again to low risk percentages at first, so you can stomach some of these losses and still be in the game. But targets, I think, are necessary to run a successful business. Now, nothing's mandatory, but they're guidelines. Your goal doesn't have to be 20 pips exactly. Okay, it can be whatever your strategy, your style can consistently produce. Some people are really good at finding pips and they can do 30 a day. Some people are just good about doing 10 a day consistently. And that's what's important. It's what you can consistently achieve. And that's what it's all about, guys, is consistency. Not how many pips you can make today, not going for that 100, but what can you do every day? That's the most important thing. That's the key to making a career out of trading. Consistency, again, is what we're here to talk about. I like 20 because, I can get it most of the time. Uh, I can get it out of the 5 days of the week, usually 3 days a week. But even if I don't get 20, I'm around 10 or 15 or so. It's easier to get 20 than it is to get 40. I've thought about making 40 a goal, but shoot, I got to get 20 twice to make 40. So why make 40 the goal? I could just make 20 the goal, and it's easier goal to achieve. Um, so, these goals they help you with your discipline in a sense. So, getting 20 is easier to getting 40, but why not get 5? Because I don't go for 5 because the risk reward. I mean, 1-to-1, I mean, a 5 pip daily stop. I mean, that's just not realistic. So I got to give myself room to breathe. 20 is right there. And so that works out for me. these targets help with your discipline because they're clear areas to stop trading, and they take an element of motion out of the trade. You get, okay, 20, done, I'm done. You don't have to think, should I keep going, should I not keep going? If you close a trade and you're up 23, you stop. All right, how many times you had a great day trading only to take that last trade and it brought you back to break even or even negative? It's annoying. So if you just stop when you hit a target, boom, day's done, that's a tally mark, you move on to the next day. No, not minus the spread. These are actual pips. Actual pips, Baron. All right. So the whole point of this presentation is going to show you the power of making 20 every day and what it can do for you. Okay. It's better to be consistent at a small number of daily pips and then gradually increase your lot size as your account grows. Okay, so just get good at 20. Get good at making 20. Do that every day. Make that your job. Forget about being a good trader. Get good at making 20. Once you can do that well, then who cares what the lots are behind it? You can just slowly, gradually increase. You average 20 with a standard lot. You grow your account with it. When you're consistent, move up to 2 lots. Okay, doing the same thing. Now keep doing what you're doing at that new level till you're comfortable again, and then you move up to 3 lots. Never doing anything more than making 20 pips a day. You don't have to make more pips. Making more pips is harder. You got to find more opportunities. You got to stay in the market longer. Okay, I'm talking about doing the same thing day in, day out, and behind the scenes we can scale up what we're doing. Okay, so I choose a pip total that is attainable daily and still allows me to practice good risk to reward. Allows you, so that's why I don't do 5 pips because, it's not worthwhile. 20 is a lot more reasonable. Plus, you can make 20 pips in a couple hours, sometimes minutes, and you don't have to watch the market all day. Okay, so making 20 pips is the vehicle.